Hey everyone, welcome back. This is another episode of Decoding Wealth. I am your host, Daniel Duhart. Today's topic, I think, is very fitting or appropriate due to the time of year. We're going to talk about some advice during tax season, some different tax strategies. My guest for today is a very familiar face for those of you that follow the show. He was on with us for last season talking about some tax strategies, and so I wanted to bring him back to just further that conversation. So, Demario, man, thank you for joining the show. How are you?
Good, man. Thanks for having me again.
Yeah.
Appreciate the invitation. Definitely want to give out some good advice today and help those folks who are trying to file their taxes or plan in the future, right?
Yeah. So again, this is a very appropriate time for it, man. I think that it's always good to get some helpful tips around tax strategies and things like that. Before we go into that, for those that may be unfamiliar with you, man, I want to give you a moment just to tell a little bit, not only about yourself, but really about your firm and the services that you all offer.
Yeah, definitely. So I am a CPA and we're a Black-owned firm here in Georgia, but we do operate out of all 50 states, especially virtually now during the pandemic. And I'm originally from Michigan, so a big base of my clients are there and in Georgia as well, since we're located here now. And we really try to focus on a few main areas when we service clients. One would be tax services for personal and business taxes, and we focus on strategy rather than just compliance in that regard, because we want to make sure we're saving our clients money when it comes to taxes or giving them advice and strategies to implement. We also work with small business owners in our business service area, where we help from business formation to implementing bookkeeping and payroll, as well as offering some consulting and audit and review work. And then we also initially took on another piece with financial services as an insurance brokerage. So we are helping clients now with their insurance needs. And we want to just make sure that our clients reach financial success in all three areas. So we don't want to be just focused on taxes. We want to be a one-stop shop for all those services.
Awesome, man. So it sounds like it's a lot that you all bring to the table, a lot that you can do for a client, but I'm pretty sure that for the clients that you all have, man, they see that as a huge benefit that you can offer them all of those services. Today, man, it's a lot that we have to talk about. And so instead of asking some questions, it'll be more so topics or points. And I just kind of wanted you to either elaborate on it or maybe explain the difference between the two. So one of the things that I think a lot of people have questions about, first off, is, tax professionals versus self-prepare software. So really, what's the difference between the two?
So when you talk about a tax prep software versus a professional preparing, now professionals will use a tax prep software, but they have a lot of self-prep softwares like your TurboTax or maybe H&R Block, or they have a free service to file online with the IRS. But the biggest difference, I would say, is you're not going to get much advice from the self-prep software. So if there's a more complicated tax return, it's not going to be beneficial if you just put that information. They're not going to give you some of those tips and hints, or if you're having challenges, you got to deal with maybe a customer service representative. And you may not even know how to explain your tax situation or problem, because taxes are complicated. But in another caveat to that, if you have a basic return, like just W-2 and nothing else complicated going on, it may be beneficial to do the self-prep software. But if you have complications or different tax strategies you're trying to implement, if you're a business owner, if you have multiple children or dependents, different credits that you're trying to itemize, you want to make sure you talk to a professional, right? Because the professional is going to give you a little bit more advice and kind of customize that to working with you and understanding and knowing you that the software may miss, right? Because I always like to say to my clients, you don't know what you don't know. And if you don't know it, you definitely can't tell the software to do it right. So there still needs to be that human factor when you're talking about taxes and you have complicated taxes. But if you have a simple return and there's no issue, never had issue, you're not really looking for tax strategy, I would say then you would want to use those softwares. But
Yeah.
it's better to hire a professional or at least have a consultation or one, even if you don't want them to prepare it. That way they can give you some advice on how to use those platforms too. So
Right.
you could use the best of both worlds.
Yeah, and personally speaking, I can definitely speak to the benefit of having a tax professional because, like you said, you don't know what you don't know, and so, I just believe in with certain things that you do, you should trust the experts in that field.
Mm-hmm.
And so, like you said, sometimes if you have quote unquote a little bit more complicated tax return or something like that, I just think that it's beneficial to have someone that can look through, advise you on the different or the do's and don'ts of
Right.
how to approach your tax return and stuff like that. So it's good for everyone to hear the difference between the two. And like you said, it's just a matter of preference based on your situation and what everyone is comfortable with. But again, for me personally, I think that there's a lot of value in having a subject matter expert or a tax professional to provide you with that advice.
Definitely. And I'll add to that a little bit more, just like with a doctor situation, right? If you're pretty healthy, you may not need to go into the doctor, but I wouldn't really self-prescribe yourself medication or diagnosis, right, by going on WebMD. It's good to just talk to a professional, even if, if it's serious or complex, you definitely want to go to a professional rather than handling that situation yourself. And it's just like we're the experts in the field, and at least having a conversation will help you a lot more than thinking you can do everything on your own or have to do everything on your own. If you don't know that you can get a tax professional. Right. And then there's different levels of tax professionals too. So on the high end of the mark, you got your CPAs, and then you have attorneys, right? So there's tax attorneys and CPAs who prepare tax returns and handle different tax situations for you. And then right under that, you'll have enrolled agents. So enrolled agents actually have to take a test and be certified to be able to prepare tax returns. So it's good to have people who have to go through a little hoop. They just couldn't sign up and start doing taxes. And then you just have your preparers who have, they don't have that license or took the extra qualifications to become an enrolled agent. Those I would stay away from. Being a CPA, nothing against people trying to help and get some money with doing that, but I think there needs to be a higher regard when you're talking about your taxes, because it's one of the most useful or private documents that you need. You need it for your mortgage, you may need it for lending, right? So you want that handled with someone with a little bit more tenure or qualifications or experience to do that. But also always vet your prospects, even if they're a CPA, tax attorney, enrolled agent, or just a tax preparer or a family friend who's just been doing taxes. Vet them out, ask them questions. Don't just give them the document and say, here, give me the biggest return or best return, because that may not always be the best strategy because the IRS will come to the door, and that's the last person you want to visit you asking questions. So just be cognizant of that and seek professional help and know the difference between the levels of professionals.
Let's have a therapeutic conversation about how and why does resentment come about. You can't get resentment unless you've had repeated adverse experience and feelings, okay? As things happen to us, and it happens to us repeatedly, it has an adverse or negative impact, okay? And this is often the birthplace of negativity, the birthplace of bitterness.
You budget, you pay bills.
Yet somehow, women like you, like me,
Are 80% more likely than men to live in poverty in retirement.
So here's what we're gonna do now. We're going to save ourselves by setting a goal to save 2% more of our income for our retirement.
Why two?
1% honors you.
And 1% honors all womankind.
So come on,
Learn more about the 2% challenge at wesaysaveit.org.
Share with us some good advice from a biblicist on dealing with difficult text.
Do the work of interrogating the text. When you interrogate an unpopular text or an unpopular treatment of the text, that's where it becomes a challenge in that it's going to create some dissonance for the hearer initially. But I believe that there's always something important that Spirit is showing us that we need to see, that maybe we need to be doing different.
You know, one of the other things that I want to transition into, if you will, let's talk about some common tax deductions. You know, when helping people with filing their taxes.
Yeah, so there are a lot of deductions you can take, and a tax deduction is something that will minimize your tax liability. So deductions are good, right? So say you have a gross income of $50,000. You want to take deductions to reduce that income down before it's taxed. So
Right.
your net income or adjusted gross income is after those deductions that you take.
Right.
So that's how you pay less on taxes by utilizing deductions properly. Now they'll differentiate based off, you know, personal deductions and business deductions, but a lot of folks will have, you know, some of the common ones are like the standard deduction, and we'll talk about itemized versus standard a little bit later. So I'll go into detail about that. But you have the standard deduction, which is typically $12,550 this tax season, right? So that's going to reduce that income down before it's taxed. And then you have deductions like if you're an educator or teacher, you get to deduct $250 off of your income based off you purchasing supplies for your classroom and things of that nature. If you pay interest on things, say student loan interest, a mortgage interest, property taxes, or even interest as far as like earning. Well, earning interest, you're probably gonna pay tax, but if it's an interest that you have to pay, you know you can deduct that on your tax return. So it's important to know those type of deductions. And then the bigger one a lot of people utilize is like the child tax credit, right? That's a big credit. That's a deduction for people that gives them money back, right? So some of our deductions are just reducing our taxable income, and some actually have a refundable balance. So the child tax credit is one of those things that gives you money back if you can take that.
Okay.
And then there's a earned income credit. So when you make under a certain amount of money in a year, you get an earned income credit that helps give you more money in your pocket and reduce your tax liability. And then if you have young children that have babysitters, after school programs, there's a child dependent credit. And that's a big one this year because it used to not be refundable. So you couldn't get cash from it, but it would reduce your tax liability. But now you can actually get an increased refund based off that deduction or credit. So there's a multitude of them that you want to look for. And then there's charitable donations. So if you have tithes and offering or you give to Goodwill, you want to make sure you capture those receipts or keep track of that detail. So you can deduct that from your expense, you know, your income at the end of the year. And then you have things like medical deduction for our older folks who they have, you know, medical bills or you know, complications, even, you know, due to COVID, there was some complications where you have out-of-pocket medical expenses. And those are tax deductible if they reach a certain level. So you want to make sure all these things are captured and that your tax professional knows about these things because, you know, they need to ask certain questions to understand you a little bit more to be able to take these deductions or even introduce them to you, all right? Because as me, I'm going to ask things about you because I can't just list every deduction in the tax code. The thing is 70,000 pages. So I need to learn a little bit more about you and your activity
so you can do your
to
job.
give you those deductions, right? And then on the business side, there are a plethora of them, right? There's a lot of things you can deduct, like right now, everyone's working from home. Well, a lot of people are working from home. And It used to be that you could take that deduction personally, but you can't anymore. But as a business owner, if you utilize your home office space, that's a deduction you could take against your business income or vehicle expenses. A lot of business owners have to meet clients or travel for business using their vehicles. They could take a deduction against whether they lease or buy that car. They can depreciate it as an asset against business income. They can write off their mileage straight up, or they can take gas and insurance and lease payments based off the business usage off their tax return. So you want to know these things and implement these things properly on your tax return because it saves you money on taxes.
Yeah.
No one wants to pay the tax bill, right? They want to reduce that as much as possible to keep more money in their pocket or reinvest if they're business owners too. So some of those are the basic ones that people may not know or may know, but there are a lot of them out there. And that's why I think it's important to have a tax professional go over your situation to identify which deductions or tax breaks you can take.
Right, and that's what I was about to ask too. Are there, you know, whether it's on the personal side or whether, you know, on the business side, are there quote unquote some common tax deductions that most people don't think about, or you know, that you kind of advise them to say, hey, don't forget about this, or you know, what are some of those type of deductions?
I would say one that I'm finding my business owners don't know is the executive compensation plan. So IRS has a code 126 over executive compensation. So these plans can be used in a business that the business pays for the business owner or employees, and it's a tax deduction for the business. So if you're a small business owner and you're only employee, you know, you get to treat that as a personal wealth builder as well as a tax deduction on your business, right? So you kill two birds with one stone, essentially. So it nets out and you win. So you can't really lose there. So a lot of people don't know you can do that because on the personal side, you can't deduct that against your taxable income. But as a business, you can. So that's one of those complicated ones I like to throw out there.
But you're right, it's probably something that a lot of business owners aren't aware of. So.
And one I really like that people can use because they have their home and they can use their home for business activity is the Augusta rule. So all my folks from Augusta, Georgia may know about this or heard about it, but the Augusta rule essentially allows you to rent your home to your business for up to under 14 days. And the reason it started is because the people in Augusta, they had the PGA tournament, which I'm sure you're familiar with. And they would rent their home out to travelers that came during that time, but they didn't want to pay taxes because they're not in the business of renting real estate. So what it allowed them to do is rent up to 14 days and not take that as taxable income personally. But for a business owner who owns their home, they can actually pay their business to use for, the business can pay them to use it for business activity. Maybe monthly you have a board meeting with your employees or even the office party. Some people utilize it for the Super Bowl party. They invite some employees and business prospects out to their home and they utilize that just as if they were to rent out a space. So that's kind of the key caveat. If you're a business, you would need to rent out a space to host for business activity, whether that be a board meeting, an office party, special event that you want to do presentations for your home, but you only can do it for 14 days. So whatever, you can't do it every day of the year and just deduct out the rules out. But another caveat to that is you need to use the fair market rate. So Airbnb and Zillow will kind of help you determine what that rate would be for like a night or a whole day of use. And you can use that as the deduction. So it's a few more pieces to it, but I can't give out too much free game. You got to call me for that. But that's a great deduction for business owners to reduce their tax liability right there.
You all know him, my boy, Will Smith.
His tone is a very conversational tone, and he has the ability to be a storyteller because he is a, actor. And so this book was more of a page turner.
I really enjoyed hearing and listening to him narrate the book. Also, I think it was a really great book because he was just so open and honest. And I mean, I don't think he really left anything out. I mean, he talked about everything in the books.
And I just want to throw this out there, that this is basically one of my favorite memoirs. And you know how I feel about the other book that I have read.
Honey, what I think you need is a socket wrench.
I played JV basketball.
I'm sorry. I don't think it looks right.
This is good, and it's all good, baby.
Is it really all good?
If you love me enough to routinely test your handyman skills, not to mention the strength of your marriage, then of course you'll visit nhtsa.gov/the-right-seat to make sure I'm in the right car seat.
I'm gonna call my dad.
Now let's cook.
Now, you know, when we were talking about some of the common tax deductions, I heard you say something around, you know, itemized versus some of your standard tax deductions. So tell us, I guess, just the difference between the two.
So it's a very important thing to understand, and it's kind of complex too, because you only get to take one, either standard or your itemized. So itemized composes of some of the things I was mentioning early, right? So your interest that you pay, taxes that you pay, maybe it's your vehicle tax, your property tax, and then the tax withheld on your W-2 wages.
Right.
Applies to that. And then you have your charitable donations, a medical expenses over a certain amount. And you used to get miscellaneous things for like casualty and loss, but they did away with those unless you have a special type of job in the government for that application. So all those things added up determine your itemized deductions.
Okay.
So if your itemized deductions are over your standard deduction, which if you're single is $12,550, you would take the itemized. But if it's under, say you only have 6,000 itemized deductions, you have to take the $12,550 because it's the higher number, which gives you a bigger deduction.
Right.
So a lot of people will say, well, how did my X, Y, and Z itemized deduction apply on my tax return? Well, you probably didn't have enough to take the itemized deduction, so we took the standard for you. And I have to explain that to clients sometimes because they'll think, oh, well, you left this out, right? No, we can't take the deduction, and that will actually hurt you in regards to your tax return if we took the standard over, the itemized over the standard when the standard was higher. So you kind of have to judge it and use professional judgment. That's one of the things, TurboTax, they're not going to tell you that. If you want to take the itemized and it's not beneficial for you, then you took it. And they probably didn't explain it well enough for you to take the higher number.
Okay.
So things like that are very important to know when it comes to standard and itemized. And, just use a tax professional or consult with them on how I can itemize.
How to go about it,
And you'll see higher income earners will try to get that itemized number higher, especially single individuals have high income. They'll want to, buy a home, buy a bigger home, because the mortgage interest and the property taxes on it will give them a higher tax deduction.
In there. Okay.
And then you have deductions too within retirement contributions. So those don't go into itemized versus standard, but they deduct against your income because whatever you put into those retirement accounts, your 401k or traditional, Roth,
Right.
those are deducted from your wages and not taxed.
Okay.
But they are taxed later, which is important to understand when
So
you're
you
in
need to
retirement.
know that, yeah.
But today, you can reduce that tax liability on your return. So that's where, that's more complicated tax strategy. I won't get too much into detail because you'll get bored in the details, but that's something we could talk more in depth, on an individual level.
Okay. Awesome. Now, I have heard people say that, there's a slight difference, if you will, in terms of, tax season last year as opposed to this year. So, have you seen that difference? What are some of the challenges that you faced with tax season this year and advising your clients?
Yeah, last year was a crazy year. We had the pandemic. They enacted the American Rescue Plan that a lot of people got stimulus payments and things of that nature. So a big difference is the government is trying to help again by putting more money in your pocket through credits like the dependent care credit. It didn't used to be refundable. Now it is, so it can increase, your refund.
Right.
And then, handing out those stimulus payments, they want to make sure they don't duplicate it. So one of the things you can do with your return, if you didn't get your stimulus through the year or your advanced child tax credit through the year, you could apply for it at year end with your tax return to get that money, your refund. But, and a caveat to that, if you paid or got paid throughout the year, and I'm going to give it to you again at tax season. So a lot of people see a reduction in their tax return from previous years, and they'll say, well, what happened different this year? I've been doing the same thing, had the same number of kids or whatever their situation is, but they just got to understand a little bit how the tax code works, and the government's never going to pay you twice if they've already gave you money.
Yeah.
And then this could also be an issue for some clients and taxpayers because they may have had lower income during the pandemic, so they got a advanced child tax credit or an earned income credit based off their income before that, which was lower. And now maybe they're employed with a higher salary or wage or made more money this year. And it needs to be corrected because all year you got money based off what you used to make, but now you're making this. So that could be a surprise to some individuals this year as well. And then last year we had a big delay in refunds. So with them sending out that money and trying to calculate, okay, who really should get it? The IRS was, they had some layoffs too and people working from home. So they had some challenges.
Made it even
so a lot of refunds were late. That was not your tax preparer. I know a lot of clients were calling me or calling the IRS often. And they've seen to clear that up this year. They have more staff. They have a better process.
That's good.
So I've been seeing returns go out normally within 2 to 3 weeks, which is standard, or even faster in some cases. But that was a big change, and it put a big stress on tax preparers and professionals because they're thinking, especially a new client, this is the first time I'm working with you. Now I have a delay.
But
it's really, not our fault. You got to be mad at the IRS on this one. But they seem to get together and get some processes and their staff up. Now, I'm not saying there won't be any issues this tax season, but it seems like things have gotten better.
A little bit better. Good. Well, as always, man, I really appreciate not only your time, but the knowledge, man, that you provide, man. I'm pretty sure that everybody watching can see that you add a lot of value with the knowledge that you have around just the tax services that you offer. And, taxes is something that we all should have at least a general understanding on, a base knowledge. And for what you don't know, you should seek that tax professional, kind of like we talked about, man. So thank you so much for just your time and providing that information. For those that are watching, if you are looking for a tax professional, I would definitely recommend Demario. As you can see, he's well versed in this space, and I'm pretty sure he's equipped him and his team to be able to handle anything that you have or have a need for in regards to taxes. So again, Demario, thank you for your time. As always, thank you all for watching. Stay tuned for upcoming episodes, and thank you for watching this episode of Decoding Wealth.